Welcome back for another report on the gold market. Gold managed to regain some ground and stabilized higher since our previous week's report. In this report, we will be overviewing important information related to the global and US economic scene that could be used as guidance for gold traders. At the end, we will also provide a detailed overview of gold's price action with our technical analysis. Starting first with the US, market participants are currently focusing on the strong recovery of the economy from the pandemic. In the past week, US monthly inflation data for February had risen from 0.3% to 0.4%, and also the weekly initial jobless claims figure was lower than the previous, now reaching 712,000. Also during the past week, the large fiscal stimulus package of $1.9 trillion had passed into law, increasing expectations further for an even swifter recovery. Even though the fiscal stimulus package may be putting upward pressure on the USD, gold's price has managed to stabilize above $1,700, which may imply some other matters may be in the epicenter of gold traders' attention, keeping the correlation of the greenback and the shiny metal positive. On Wednesday, the 17th of March, we get the FOMC meeting with an interest rate decision pending. Even though the Fed is expected to keep interest rates on hold, the market's attention turns to how the Fed comprehends the swift economic recovery and what it plans to do if the recovery continues to speed up in the following months. At the moment, analysts are even considering a change of the current strategy of the Fed. Most probably, the Fed may address rising inflation concerns and rising bond yields that could be very positive for gold's price. However, as the Fed's targets are still far from being reached currently, especially when referring to unemployment and inflationary rates, we do not expect the Fed to take extensive action in this meeting. In any case, gold traders should be on the lookout for any unexpected price moves, as the market may react abruptly but temporarily on headlines. Volatility could also rise during the press conference. Adding to that, gold traders should be aware that on the 17th of March, we get the US building permits and housing starts figures for February, while on the 18th, we get the weekly initial jobless claims figure and the Philly Fed business index for March. On a different note, in Europe, the market's attention turns towards the vaccination program, which has not been settled yet, and the bloc's new COVID-19 cases have been rising again since mid-February, even though lockdown measures still apply. In the past days, Germany, Italy, France, and Spain, along with other European countries, announced they have temporarily halted use of COVID-19 shot made by AstraZeneca. This could be postponing circumstances from improving and could be increasing economic risk at the same time. Gold's price could be of great interest for the bulls in this case, as the economic rebound of the bloc seems to be stretching into a longer time frame than initially expected. Finally, gold traders should be aware that the Bank of England and the Bank of Japan will be holding interest rate decisions on the 17th and 18th accordingly. These events will also be in the market's focus and should be considered by traders. Moving now to the technical analysis and gold's 4-hour chart. Gold has currently stabilized nearby our R1 1735 resistance level, as this level has been tested on the 3rd and 11th of March but has not been breached. It could be considered solid. Yet the highest price reached in March for the yellow metal is the 1755 resistance barrier, briefly tested on the 1st of the month. Even higher, we have also noted the R3 1775 line as our top level for this report. Since the overall trend line of the instrument remains downwards in the long term, we have set our first support level at the S1 1700 line that was tested in the previous week. Lower, we have set the S2 1680 support barrier, which is the lowest level reached so far in March. Our lowest price for this week's analysis is at the S3 1660 hurdle. In the short term, the precious metal has moved into a sideways motion, moving mostly between the R1 1735 resistance level and the S1 1700 support level. Below our chart, the RSI indicator continues to move between the 17 and 30 level, possibly implying the market's anticipation for the upcoming events. Please note, in an extensive bullish or bearish run, all the pre-mentioned levels could be breached depending on the direction and due to the important fundamental and economic topics coming up this week. We hope that you found this report useful, and if so, don't forget to subscribe and to share. From all of us here at IronFX, best wishes for solid trading.